Uganda Chamber of Energy and Minerals has brought together stakeholders from across Uganda's economic landscape to unpack the implications of the 2025-2026 national budget on the energy, minerals and petroleum sectors at a function held at 4 Points by Sheraton in Kampala. The post-budget breakfast dialogue served as a platform for open engagement on policy priorities, sector financing and private sector participation, especially as Uganda prepares for the rollout of the fourth National Development Plan.
We need to quantify the minerals that we have in this country. We have over 58 minerals in this country, but as the chamber, we are saying government needs to be able to focus on at most 10 minerals, okay? 5 to 10 minerals that they say these are going to be our priority, these are going to be our drivers for development as a country.
Uganda Chamber of Energy and Minerals Vice Chairperson Pamela Nantamba stressed the importance of aligning national budget allocations with sectoral priorities to attract long-term investment and accelerate value addition in oil, gas and mineral resources.
Private sector is making sure that one, we have the knowledge, we have the information, we are making use of the available resources, but two, we are reflecting on these critical sectors of the economy. What will it take for these sectors to leap from where they are to the next level? Of course, government is going to fund on the basis of the allocations that have been read to us in the budget. However, a lot of that also has to come from private sector investment.
Also in attendance were representatives from the Private Sector Foundation Uganda, key policymakers from line ministries and international development partners, all expressing commitment to inclusive and sustainable growth of the extractives sector.
Even so and so incentives, have they delivered as to what was promised? If yes, good. If not, why not? And then what needs to be done? Not just giving incentive after incentive after incentive, and the status quo still remains until they close shop and go back.
Participants commended the government's emphasis on industrialization and energy access, while calling for stronger collaboration to transform budgetary commitments into practical.
The energy sector is receiving a fair share of the budget because it is acknowledged that in order for you to industrialize Uganda, you have got to have electricity, you have got to have stable electricity, cheap electricity and accessible. That where you're going to establish a mine, you need electricity there. The electricity must not be very expensive. The advocacy efforts have been pushing for 5 cents on the dollar per kilowatt hour for industrial use.
The dialogue reflected a shared vision, unlocking the country's rich underground wealth to create jobs, increase revenue, and foster inclusive development.